Good afternoon guys, Max Norbury here from HowToTrade. Now, as we approach Christmas, there's some things that definitely become more of a sense of normality, I would say, for this time of year. One is, of course, we're all feeling festive. The second one is, unfortunately, a lot of people get ill. Now, if you can actually tell in my voice at the moment, I've actually got the man flu, so I'm suffering with the man flu at the moment, which is another one of those very stereotypical Christmas feels. The third one, however, is a little bit unordinary. The third one is that there is a dramatically increased probability that the markets will experience a flash crash. Now, what is a flash crash, I hear you say? Well guys, in this video I'm going to be talking about flash crashes. I'm going to be talking about the fact that illiquid markets only take a little bit of money to move, the price action in the bars, which is ultimately how a flash crash happens, and I'm also going to talk about how you can protect yourself as an individual trader trading through the months of December and January. So guys, without any further ado, I look forward to catching you in the charts. See you in a moment.
Hey there guys, so I hope you're all doing well. Now, I would like to say just again, the reason I sound like Batman is because I'm currently suffering from man flu. It is the second time that I've had man flu now in like 2 months. So flash crashes. Flash crashes, you may or may not have heard of these before. I appreciate many of you guys out there are at the beginning of your trading journeys. You possibly have, not heard this term before. Maybe you haven't even seen a flash crash before. Bear in mind, we haven't had one really for a couple of years, but it's just about learning about why they happen. It's about understanding that they can happen, and also it's good to understand the consequences of it happening. Now, there have been instances in the past where slippage has occurred so dramatically that retail traders with $500 or $1,000 accounts have ended up owing the broker tens of thousands in losses due to them being exposed in a particular currency that unfortunately was directly affected by a flash crash. Now, there are many reasons why a flash crash can happen in terms of what the direct cause is, whether that be some kind of fat finger trade. Maybe you've heard that expression before, an accidental trade that got locked in with a position size that was way too large. Maybe it could have even been something to do with a hedge fund or bank that one of its traders had a bit too much fun at Christmas time and thought they'd be silly in the markets. There have been a number of excuses and reasons behind the flash crashes over the years, but the same thing always occurs, and that is that many people lose an incredible amount of money. Now, with this in mind, a flash crash is what we are essentially looking at right here on front of this chart. Okay? Now, bearing in mind, this is on a 4-hour time frame because I needed to go back long enough to be able to show you what the flash crash looked like, and I couldn't do it on a time frame that's lower than this. But for the sake of giving you the transparent view of this, that move, which is I believe 13 or 14%, is it? 12.32% hike in the GA for 2,220 pips happened in 1 second. That was a 1 second candlestick that we all reviewed at the time of it happening on the streams that we did inside the trading room a day later. Okay, so it is an incredible amount of movement there in a split second, just like that. Now, the unfortunate side effect of this was that people did lose thousands. Some people had good short opportunities in the GA at that moment in time, or short other Australian dollar pairs, and they weren't overexposed in terms of their risk sizing. They stuck to their risk management rules, but unfortunately these people, they didn't have the power. Their stop losses did not protect them from the kind of move that is, a volatile move like that, from happening. Now, That's the scary side of things, okay? The good side of things is there are things that we can do to protect ourselves from events like this taking place. But first of all, we need to understand why it is only around this time of year that they happen. Now, if you think about, how can I say this? If we think about this in terms of, let's just talk about it in terms of the money aspect. Okay, you have market A, which is here. This market has $5.5 trillion in it. It is going to take an enormous amount of money to move the market a single point. Okay, just to put it in perspective, if every single retail trader in the world went short at the exact same time in the exact same currency instrument, we wouldn't have the power to move the market a point. So it takes an incredible amount of money to be able to move the markets. And when you have full liquidity in the markets, excuse me, say between the months of February to August, September, you know, that's going to be prime time, you know, for needing as much money as possible to move the markets. Now, let's take market B for an example here, okay? Market B is a market that's trading between, let's say, the 20th of December and the 15th of January. Now, I'm plucking those dates out of thin air, kind of, because really it's about halfway through December to halfway through January. Now, what happens in between those 2 days in time? Well, there's going to be an increased amount of Christmas holidays. There's going to be families going away, taking trips away. And you also find that the liquidity in the markets takes a nosedive around this time of year due to the very reason of people going away with their friends and their family for Christmas and taking excuse me, taking holidays, right? So, with that understanding in mind, market B is going to have a significant less amount of liquidity than market A. Market A represents high active trading months. Market B represents the Christmas trading months, right? So between that 4-week period, there is nowhere near as much liquidity in the markets, which means as a direct result, it's going to take far less money to move the market. Which is why on January 3rd of 2019, we had a flash crash because the liquidity in the markets were incredibly low at that point in time. One guy, I have no idea how it happened. A guy pressed the wrong figures, keyed in a wrong tab, sent the market absolutely skyrocketing. Okay, which is just one of the common excuses for a flash crash, right? Now that we understand that, now that we can shelf that, and hopefully I can stop coughing, we can talk about the actual protection side of things. Now, the protection for a flash crash, not too much to it. For me personally, when you are, let's say, when you're an intraday trader, and I would say that most of you will be, you know, hopefully there are some long-term swing traders out there still, but most traders that come through our doors at least are intraday traders. Now, these intraday traders, they are used to trading on things like the 15-minute, the 1-hour time frames. Okay, what I would always suggest is really dialing it down. Follow the holiday patterns of the rest of those traders around the world, the institutions, the banks, the big firms who take that time off. Okay, these guys are taking time off to spend with their friends and their family because they've done a working year. That should be the same for you. So the first thing that you can really go for here is to take that time off with them, so that you know that you are going to remain safe. You don't have any liquidity in the markets. Okay. Now, rolling back your positions and rolling back your trading. I'm not saying to everyone, like, this is it. That's it. You're not allowed to trade for a month, right? End of the second week of December to the end of the second week of January. That's it. You're cut off. No trading. Okay, that's not what I'm saying here. But what I am saying is, if you must be in the markets, if you have that undying urge and need to be in the markets at that time, try and pick things that are potentially a little bit more, I don't know, slightly unusual, perhaps. We think about things like the niche metals, platinum, palladium, Okay, possibly even silver. Look at UK Brent for an oil. Look at natural gas commodity. You very often will not see, you will not often, if rarely ever, see flash crashes take place in assets like that. It can happen in anything, but looking at historical data and historical trends, we don't see that happen in any of those kind of commodities. So there are still things that you can trade. If you really like trading the Forex market, then just only be in and out of the market very, very quickly. Okay, look at very short-term intraday trades. Trades that you're going to have to leave open 24 hours and you're going to have to go to sleep and then wake up the next day to. That's going to be a no-go. Okay, my personal suggestion. Now, there is another thing. You can look to activate a guaranteed stop. Guaranteed stop losses, they guarantee wherever you set the market rate. You want to be out at 186 in the GA, for example, you would have been out at 186 flat. That's it, no questions asked. But they cost a lot. And you also have to find a broker that is going to be able to offer you that service, as that is not a normal service for a retail trader's account with a brokerage. Okay? So that's not really, that is one way, and I was just throwing it in there for the sake of you guys, wanting all the facts. That is in there, but it's not going to be a realistic fact for you guys to actually go away and use. The best thing that I can say, guys, is between the end of the second week of December and the end of the second week in January, use that time to increase your knowledge around the markets. If you have got that undying need to be in the markets, to be active in, evolving around the markets, evolve yourself with experience and knowledge. Don't worry about trading too much. Remember, guys, you've got the end of Jan to basically December to trade. Take a little time off. Give yourself a pat on the back. It's been a good year. Maybe it hasn't been such of a good year. Maybe you can look forward to the next year more. Just take that time to spend with your friends and your family. Study the markets if you really need to. Okay? Hone your skills in some kind of aspect of price action, some form of analysis. Maybe work on a new strategy or something. Do back testing. Okay? Back testing is another thing that takes an incredible amount of time. Funny how many new traders say, I haven't got the time to backtest. Well, yeah, you do. You've got a month at least every year. Use that time to backtest a new system. Get yourselves ready to get off the ground running come the end of January. Okay, these are the kinds of things that you can do with that time that is presented to you. And at the same time, you are protecting yourself from something like that happening to your account. Because let me tell you, you're trading with a $1,000 account, a $5,000 account, a $10,000 account. How would you like it if you were trading with a minus $15,000 account because you got caught in one of those things? Okay? And that's all I'm going to say on the matter, guys. So, I'll catch you in a sec.
Hey guys, so that's pretty much it right there. Just to conclude, just think about the fact that flash crashes are indeed more likely to happen at around those Christmas months because of the lack of liquidity in the markets. The fact that it takes less money to move the markets means that if one man with a lot of power, or when I say one man with the backing of a financial institution of some kind, if he goes a bit silly at Christmas time and decides to press the wrong key, that can be the make or break difference between you losing tens of thousands of dollars or whatever currency you're trading in. Okay, remember that there is very little time, especially in our lives at the moment, to take a step back and to really focus our attention on gaining more knowledge. Knowledge ultimately is power, and the more you learn, the better your trading experience and your experience of trading is going to be. This time around Christmas is the perfect opportunity to do that. And ultimately, you apply yourself the right way around the Christmas season, in between, around December, January, and you gain more knowledge and you do the back testing on the strategy, or you design a strategy, or you put rules and processes in place. You are at the same time protecting the capital in your account, and you are ultimately going to give yourself a better chance and opportunity at getting ahead come the trading season starting again in the middle of January. So guys, that's going to be it for me this week. Please don't forget to hit that bell icon right down there. Also subscribe to the channel. We are doing incredibly well growing this channel now, guys, and it's all thanks to you that we are getting there. So please hit that bell icon so you don't miss out on any videos. hit the subscribe button as well to be a member of the channel, and also just to stay up to date with everything that's going on here. This will be the last video before Christmas now, so have a fantastic Christmas. Enjoy it with your friends and your families. I hope you remain safe out there at the moment. I know there's a lot of new fears over this new COVID variant thing, so please be safe, and I look forward to catching everybody in the new year. So Merry Christmas, have a wonderful and a happy new year, and I look forward to catching you in 2022. Speak then, guys. Trade safe.